I mean, so we had discussed about a lot about Spark Capital, how you started, so on and so forth, right? Like, how was it to start in, say, 94 of sorts, very young, fresh blood, back in that day and age when starting your own thing was not recommended by parents?
Yeah, it's not 94. 94 is when, I think 93 is when I started working. This is in 99, 2000.
Yes.
This is the time when we used to have the previous .com boom,
Yes.
right? It was like when the Amazons of the world were born, pretty much in the world. That's the time kind of thing. Right? So I was 29 or 30 then,
Sure.
I suppose. And I think coming from a typical middle class background, which I think most of you would be from a similar background, had a nice job in a foreign institutional investment bank called Parik Capital. And importantly, it was the last 1 year of the job was in Chennai at Mumbai salaries. So, or Mumbai salaries, which used to be like Hong Kong salaries. So, like it was like, I still remember, I think I was drawing 19 lakhs CTC per annum
Back in that day.
in 99, 2000 in Chennai. So, like it's kind of a, I'm saying it's a high exit barrier in terms of quitting it and things. What I also did is bought, there used to be a concept, I don't know, you guys are not familiar with it, but there used to, this CTC became a concept much later, right? Earlier, the way the companies used to incent people is stock options were not an option in a foreign institution. So they used to give us subsidized interest home loans.
Sure.
And that is a way of enticing people to kind of work for them. So there used to be a 2% loan. So I took a 10 lakh rupee loan and 2% interest rate, so it kind of made sense, and bought an apartment in, under construction apartment in Thane, Mumbai, when I was working there. And it was by this company called Lakh Housing. I think it's still a listed company now, but it's become a bad company that time. And Lakh didn't deliver it on time as well. So it kind of, the project got delayed, and it's kind of your 10 lakh capital got stuck there, and you were servicing. And so when I took the decision to move away from a cushy job into doing and becoming an entrepreneur, there is a minus 10 lakh liability to clear before I came in here. Not much of savings because you spend more in the initial days, and you have a significant salary to kind of give up and get out of it, kind of a thing. That added to the pressure of what the parents and the ecosystem says is also the fact that there are 2 or 3 of my cousins or my previous generation in my extended family who have tried to become businessmen and entrepreneurs and failed. So there is a backlog of failed or businessmen normally fail kind of a concept, a 10 lakh loan and a large salary to kind of give up and start. I think the only thing which drove me to take this decision is the fact that because I was working for a foreign institution in some sense, their typical corporate that they want to service is of a certain size. Right? It will be the India Cements or the Madras Cements in this city. It won't be the upcoming Polaris software or some such thing, which is like a small growing company those days. And because of that, your ability to add value to those companies is limited. And it was a kind of becoming a boring job. It becomes more of a relationship management, going and kind of meeting the CFO or the CEO, telling some nice things, adding some two bits of whatever you can do from a servicing point of view, because they neither are seeking your help for structuring, nor are they seeking your help for valuation, because they believe they know it better than you anyway, nor are they seeking your help for actually finding the right solution. They are just saying you have the license to offer this solution. You are the guy who can be in the middle, so be. That's typically how the big banking works. Right? That's how commercial banking works. That's how investment banking works at the larger scale. The thrill of working with young companies and being able to influence the way they think about their capital structure and how it impacts their business evolution and plan was not there in those situations. So working for Peregrine didn't make sense anymore. I already moved to Chennai by then, so there's no other fellow in Chennai who I kind of could go to of a mid-sized bank, because Chennai was not it's commercial banking place but not an investment banking place even today. So either go back to Mumbai or start something on your own. So I think the starting made more sense than going back to Mumbai. So that's kind of how it
So
happened.
now you left, and then I suppose you were in search of building a team. How is it to sort of build back in the day when no one was ready to take a risk? I suppose your co-founders would have said, hey, this is too risky for me, and your initial few sort of lads who wanted to join the pathway also would have said, this is too risky for me. How did that happen?
I think it was kind of difficult to do it. I think one, I had to sell even to my co-founders, right? The first co-founder who joined me after I started this was a guy called Tyagesh, who used to work at Citibank. He was a colleague of mine in Peregrine, then he moved to Citibank, and then he was working in Citibank, and he just got married.
Sure.
And I actually met him when he came to tell me about the fact that he's getting married.
Sure.
Right? So I met him along with his fiancée, who would be his wife. And I had to kind of present this opportunity to him in that situation, right? Which is like, there's some poor girl's parents who are giving their girl off to this guy thinking he's working in Citibank, and then he has to go and reveal the news to them that he's going to start pretty much start a business without knowing what its future is going to be. But I guess the inherent risk-taking ability of people comes into the fore. Right?
Sure.
One, I think for Tyagesh it was Chennai, the lure. He was in Bangalore Citibank, so Chennai was the attraction. Today, it's very rare to find people who find Chennai to be attractive compared to Bangalore. But I think those days, at least he was from here, so he liked it here. So it was easy. The location was kind of a lure. The risk appetite was a lure, and the fact that he trusted me and he knew me before was the lure, and therefore he came in first.
Sure.
Kapil was a little more difficult sell, but I think Kapil was working in an even worse place called HDFC Bank, right? which is like commercial banking.
Sure.
So for any commercial banker, even today, being an investment banker is a dream, right? It's like an elevation of life, right? Or role of what you do in life. So I think the lure of moving away from a very process-driven, archaic, structured environment into doing something more challenging and unstructured in some nature is what drove Kapil to come in.
For sure.
And once they came in, we took a few people doing CA articles, kind of a thing, and then that's how we formed the core 5-6 people team initially.
Nice, very interesting. So when you started this, I assumed that there were obviously a lot of hiccups. The first few years were like, hey, what do I sort of, am I doing the right thing or the wrong thing? Which of course, even a lot of startups in our day and age sort of think about it, right? How does it happen to keep the momentum for a lot of folks to think that, hey, you are going in some essence in the right way to do it?
I think, you see, we were fortunate that we are in a business which has a very low capital intensity.
Sure.
Right? Because you are advising, so it doesn't require, it requires a few computers and an ability to pay salary to a team of people for at least a few months before your billing comes in. So we did de-risking by two ways, right? We said we will sacrifice the significant upside which comes from transactional revenues by doing what we call the retainer method, which probably what you guys are also trying to in some form do. So we went to a few corporates, and they fortunately trusted us and believed in us, and they gave us anywhere from 25,000 rupees a month to 1 lakh of rupees a month of retainer. So that kind of made sure that we at least had money to pay salaries, run the office.
For sure.
And then we chased after some of those larger opportunities and transactions, which took 6 months, 12 months to kind of come in. The most difficult phase was the first transactional success which we got was 15 months from the time we started Spark, which was the most difficult time, right? Because while people are getting their 20,000 rupees or 30,000 rupees salary, they're not actually seeing that the big money, which is the lure of coming into. And in our business, those days, the big money was not stock options. It was actually the cash, the bonus payouts. And even today, in our business, bonus payouts are the bigger upside than the stock optional value kind of thing. Not in the wealth management business, I'm talking of the investment banking business. So till we saw the first success is when it took time to kind of, it was challenging to keep your own motivation and the motivation of the team which is going with you, that actually this is the right path. But the quality of clients, the quality of work you were doing, the fact that you are actually getting paid for that work you are doing, and the validation of increasing number of people wanting to kind of do something with you and give you some opportunity, I think is all of those factors helped us
For sure.
counter
So,
some of these.
so you started in an India where it was non-digitized per se, right? Like I still remember, my family also starting a lot of businesses around that point of time. None of it was digitized. Opening a bank account meant that you had to spend a month's time. Um, how sort of pushy was it to live in an India that was non-digitized versus living in India today? And how would you obviously sort of make processes a lot more streamlined and back in that era so that your clients are, remain attractive and remain, sort of believing in you?
See, I come from, I was an equity trader to start with my career, right?
Sure.
93. So I come from a system where we used to have this landlines, phones, right? And you call the broker on the exchange floor and say, buy 1 lakh Philips, up to 450 rupees. Let's say some limit order you're giving. So this is at 9:30 or 10 in the morning, you're giving this order to the broker. You don't know if it happened or not till 3:30 in the afternoon when the market closes. He comes out of the floor and then he kind of tells you if it is at 440, 445, 450, 455, whatever it's kind of thing. The entire thing happened only from a word of mouth, right? It only happened. And I know if you have, maybe you should have seen the movie Harshad Mehta's Scam, right? So you would have seen the floor therefore, right? It will always be some signals. You will not even understand what actually they mean. New York even today works in that format, so you actually can see that in that floor.
Yes.
So what we knew was that no commitment is backed out of, right?
Sure.
There are no exchange guarantees and all like this it's today, but no broker backed out of commitment. No jobber, the people who are making the market in the last mile are called the jobbers. No jobber backed out of the commitment, and no institution which kind of bought or sold backed out of commitment. So I think we did not have the risk management ability of what we have today because of technology and the digitization which happened kind of thing. But we had probably what was compensating for this lack of risk management technique was the honor, right?
Sure.
It was a very honorable market. I think it continues to be an honorable market, but for crooks who will always be there in all markets from time to time kind of a thing. So I think we were helped by the fact that we had a market where everyone honored commitment and a word.
Sure.
So for a long time it took me, it was a challenge for me to negotiate 40, 50, 60, 70, 800 page documents of agreements between parties.
Sure.
Because at least in my 22 years of entrepreneurial experience and 30 years of work experience, I have not seen a shareholder agreement actually been opened by either a buyer and seller and successfully negotiated and closed out.
Absolutely.
Right? So I believed then, I continue to believe now that it's only a word which wins eventually. But from a systemic point of view, technology is necessary, and these are all essential things and significant benefit that we have gained from it kind of thing.
Sure.
So if you ask me how we did business those days, it was a challenge, right? To transfer money used to take 3 days or 4 days. The RTGS was not there during those times. There's something called high value check concept used to be there, which only works at between 9 and 10 in the morning. You have to kind of deliver this check kind of a thing. So from that level to physical share certificates, right? Demat was not compulsory. It was introduced by the time we started business, but it was not compulsory.
Sure.
So a lot of companies still used to have physical share certificates. Then there used to be duplicate share certificates. Then you don't know the signatures didn't match. So we used to kind of have times when we buy shares for a client. Let's say you bought 10,000 shares of Infosys today. You did not know whether you got 10,000 shares, 9,500 shares, or 9,000 valid shares till a week or 10 days from that day, because the share certificate had to go to the depository or equivalent physical verification. The signatures had to match, and some of them will not match signatures, so they'll be sent back. So it's called bad delivery.
Which year was this?
98, 99.
Interesting.
Right? So that's how technology has evolved, right? Today you take it for granted that you bought, there is a demat slip you sign and everything gets transferred. You don't even know where your shares are, and they're all trading as if it's kind of so easy. But that's how markets used to be.
Interesting.
And it's called bad delivery, right? And bad delivery is a big thing because let's say you bought something at 100 and the price moved to 125. There's no way in hell you can sell 100 till you get the delivery, because you did not know you will get 100 delivery or 100 will get rejected.
Sure.
So day trading was much more difficult, or not day trading. Short-term trading was much more difficult. Day trading you can still do because you don't deliver anything, kind of thing. Right? That's kind of where it's
Interesting. And in all this process, I assume that RBI was always as stringent as it is, or how was RBI back in the day, and how is RBI today?
So I think RBI is one part of it. RBI had less to do with the equity markets. It's
Yes,
more
SEBI.
SEBI and the exchanges, right?
Yes.
SEBI through the exchanges. That's I think the way to see it. I think SEBI has evolved a lot more sophisticated today than it used to be.
Sure.
Right? I think the market manipulation, the market inefficiency was far higher in the pre-technology era than it is today.
Sure.
Right? Manipulation is still there, but it's kind of far higher those days than it used to be, kind of thing. Right? The entire Ketan Parik scam,
Yes.
right, was about manipulation of markets because of the physical delivery system of shares.
Let's talk about Ketan Parik scam and what was it, and in short, if you could how did you react and your team react, and then how did the client sort of say on to this? What was Ketan Parik?
See, I think Ketan Parik scam is essentially a scam where he had a certain network of significant investors
Sure.
who were either under his influence or were made to be influenced by him,
Sure.
and used that to rig up the technology stocks.
Yes.
Right? So what happens when you have a cohort of investors who are 40-50% of the market, right? Your ability to decide the price of a stock, whether it is Infosys or Satyam or whatever company is there, becomes a lot more easy. Then you add the promoter angle to it,
Sure.
and bring in the promoter to play with you, because the promoter was interested in kind of increasing the stock price in some value, and I think then you have the deadly combination of significant money, significant pricing power, and the insider also playing a role with you and supporting you, kind of thing. The deadly combination of these three in technology services stocks is Ketan Parik scam. I think where it kind of impacted us and how we handled it is the following, right? When we started the brokerage business, and we were talking to the mutual funds and institutions in Mumbai, the first fear we had was will the fund manager or the research analyst on the buy side, will he or she appreciate the research we are doing, or will they ask for khabar, right? What is the information you have, right? Now you come from the south, so you should be knowing something what is happening in Madras Cement, something what in Dr. Reddy's laboratories, or some other place. Is there a bonus issue coming up? Can you give us some privileged information, and therefore gain our trust and get business,
Sure.
right? Which is against regulation, against law. Therefore, now our biggest fear was, will we fall to the temptation of having to share such information in order to survive and get business from these institutions, and two, if we don't tread that path because we want to be in the right path, one, will we ever get a chance to make an impact with these institutions, and two, will we, even if we get a chance, will we actually make a mark with them? We chose, and I think that's probably the reason why we took a little longer to get to scale. We chose to say that we will never do something called inside information sharing. We will not do it, right? We said we will be ahead of the regulation in terms of, if regulation says you cannot share this information for 3 days, we will say we will not share for 5 or 7 days after we get the information. So we were a lot more stringent, lot more conservative. Being in Chennai helped us, because that's kind of, at least it's not a market full of such people, right? Sure. People are used to these kind of things, right? Sure. It's like a completely insulated, isolated kind of a thing. So no temptations. So it helped us in some form.
For sure.
So how do we said, okay, we may be small, we may take time to build, but we will do it the right way. We will not do this kind of thing. And it took us, therefore, time to crack into some of the larger public sector institutions, right?
Sure.
The private is a lot more merit-oriented in that sense, because at least they may have their bad side, but at least they will have the good side and bad side. The public is all about bureaucracy and bad side,
sure.
at least,
Sure.
right, in the banking system. So it took us time to get there, but I think what happened, fortunately for us, is for a set of reasons, the the government, finance ministry, SEBI, RBI, they were hell-bent on cleaning this system, right? The financial system, intermediary system in this country has been cleaned up substantially. We still kind of have problems here and there, but I think directionally they have made at least the financial infrastructure has moved towards high technology efficiency, transparent system, phenomenal guarantees and the quality of the guarantee of the exchange,
For sure.
and the likes. So SEBI came down heavily on inside information and any such passage of information and trading on that nature. A lot of algos came in the market which kind of track patterns in trading and link it to potential manipulation. All of those things also made sure, and also the institutions started paying well to the people. So fund managers got paid reasonably well in terms of what their upsides are going to be. So the temptation to make some money on the side became lesser. Private sector became much more prominent in the industry, so which kind of also helped us. So the macros helped us
Exponentially.
kind of help. Yeah.
How, so now you've been in the business for about a decade now, and then there's this big financial crisis that has hit. I still, remember watching a lot of movies on it. I still till date sort of, pick some insights on it. How was it that it, when did it affect India? What did you think of it? Did you think that, hey, this is just yet another crash that has happened in Y2K and everything's going to be fine?
Yeah.
Or how was it that Indian institutions reacted to that financial crisis that was massive?
No, I think in some form it's a lesson to all of you guys. You as an entrepreneur will also face these situations in your journey. It's never going to be one way anyway. It's not going to be one kind of thing, right? We had two problems because of global financial crisis. One is the overall the sentiment, liquidity, flow of money into India, market valuations, coupled with our own internal problems of the finance ministry going back on retrospective tax amendments and the negative impact of it is one thing, right? So everything came crashing in 2008. We actually moved into a larger office in Santhom, which I think you
Yes.
probably have come, or I don't know if you've seen that office or not. I don't think you have seen it. So Santhom office where we moved from recently. We actually moved on the Jan 5th, I think, or of 2008, if I'm not mistaken. And the day we moved, the market hit a lower circuit, right?
Sure.
So it's kind of, so you have seen it. Suddenly you take an office which was like 3 times bigger than what you took.
Sure.
And you're kind of facing this crisis in front of you. That is the generic market. I think everyone was affected by it.
Yes.
And I think generally the sentiment is, I still remember in the global financial crisis time, Tata Steel had a foreign currency convertible bond,
Sure.
right? Which normally trades at 2%, 3% yield. That's where it
Sure.
kind of normally trades. Immediately after the Lehman collapse, this bond of Tata Steel traded at 18% yield,
Sure.
right, in dollar. You were
Sure.
getting 18% on Tata Steel as if it's never going to be
Plus the
able to
conversion.
service kind of thing, right? So that's kind of a big crisis. So everyone was impacted. Second thing for us, we also had the unique situation of being defrauded by one of the clients,
Sure.
one of the companies, whom we have, we're not a lender, so we didn't lend, but we helped them with a 10 crore cash
Sure.
advance to tide over what they said was a problem of temporary nature,
Sure.
only to find that they actually were in the middle of a fraud themselves, right? And we lost all the 10 crores, which was more than the net worth of Spark Capital on that day, right? So this is on 2008 Lehman. So this both happened in the same time frame. So the macro was bleak. The micro was also bleak for us at that point in time, which probably was the worst crisis we faced in our existence as a business. I think two things helped us then. One, I think we always learned to live within the means of what we could afford. Right? We had a certain ability to afford this one. We never went beyond that and kind of tried to build costs or burn rates or those kind of things which are beyond what we could think. Second, we were never a publicly or outside funded company. Whatever we had only from what we generated within. Pretty much like you guys, everyone in the company pretty much had shares in the company, right?
Sure.
So it is like a very employee-owned business, with founders owning different stakes depending on when they came in, but no external investor. So we always lived to work, earn, spend, work, earn, spend. If you have surplus, spend to grow. When we lost all the money we had, that kind of helped us.
Sure.
We were still kind of working, earning, and coming back. And I think this was just an extra cushion in the bank which went off on that day. Second, I think we had the stomach to not only face that situation of a macro and a micro crisis. We maybe destiny, maybe circumstance, maybe my own risk appetite or ability. We actually said that we will now double down and use this crisis as an opportunity. And that's how we built our the real value,
For sure.
which is what has actually happened.
So now you've seen like 2 crises. I think you would have taken all that appetite per se. Did that help you sort of build a bigger business over a period of time in the next coming decade, which was from 10 to 20? Or was it like, hey, you know what, I should probably focus on my single businesses that are doing well and sort of omit the rest of the business that existed?
The first foray was a lot more conservative,
Sure.
right? Because it was actually the first time you were going outside of the advisory business, which is very, very low capital intensity business, what you understood very well, into a business which is highly competitive, which required a minimum factory size before you can actually make sense to the market. So it is kind of a big leap for that time, for our thinking then, and therefore we were very, very conservative of how we go about it. And we said the first one we'll take our time and do it, right? See, there are 2 ways of building businesses. One, the youngsters do it differently, and we did differently, right? One, you can put a lot of capital, put a lot of critical mass of talent,
Sure.
and then hope to get to the business scale faster, and thereby make sense for the capital you burnt.
For sure.
That one way of building businesses. IIFL is the classic case of a success story coming out of that strategy.
Back in that day.
Back in that day, right? They built a huge amount of, they burned capital, they got the best possible team from CLSA, gave them large amount of money, and said, you go and build it. They built it successfully.
Sure.
They got to a 5% market share very, very quickly. We had no capital. We had no interest to work for others.
Sure.
So like you are potentially, you think you are working for someone like us, right? So
I don't think that way, but yeah.
even I'm saying a minority small shareholder, right? We said, okay, no, we will not work for anyone else. Then the only thing you had in your hand is time.
For sure.
Right? It's either money or time. One of these two has to kind of work for you. So we said we'll take time as the equivalent of money, because with time you can generate more money to kind of spend. So we bootstrapped in that sense, and we said time is the way to do it. So therefore we did only one business diversification,
Sure.
and we took time as the factor of
Alpha,
for scale and not capital. Now we are saying that no, now that we have done that well, and we have got the confidence from that success, and the fact that we actually sold the business off means there's also a significant de-risking from a shareholder point of view.
For sure.
We are now saying that no, we will not therefore adopt the same approach. So we actually said we will do both asset and wealth management, build them both to scale quickly, and actually do what you guys are doing now, right? I think we probably are going to spend a significantly larger amount of money than I have ever made in my Spark Capital life as in cumulative sum of profits in just this year in building our wealth and asset management business, right?
Sure.
So it's going to burn a huge amount of capital, right? Probably in the 3-digit crore figures, right? But I think that's kind of again with no external capital. Probably the first external capital I'll take it is now, because I think it's once you have embarked on this journey, you have no choice. You can't go back and become time as the factor. You have now only say capital as the factor. So you have to kind of go the full steam on that. But we are doing it 2 businesses. We are doing it with a lot more capital investment upfront, a critical mass of talent being there right now, pretty much like startups are doing nowadays, though in a non-startup, non-technology play.
With a lot more experience, of course.
With a lot more experience, yeah.
Speaking of burning 3-digit capital, 3-digit crores that you just mentioned, what does money mean to someone who's 53, 54, and who's seen it all in life, who's probably dealt with a lot of bankers. What is money?
See, I think there are two things here, right? I think which probably differentiates, distinguishes myself and also Spark from the rest of our business, our industry, right? We are in the business of money, right? Pretty much like you guys are also in the business of money, maybe from a different angle. And therefore, the ability to see money and the ability to kind of find out how easy or how not easy it is to make money is very, very high for all of us.
For sure.
With money comes greed, and with greed comes or the temptation to do things which will make it quick. How do you make quick money kind of a thing? I think we are different from the rest in the sense that we never, for example, I have never owned a stock
Interesting.
in my life after 2000, except one some client just I bought for 10 years and I
What
held
was
for
it?
10 years kind of thing. It's not even a company which you will realize now. It's some company called Megasoft, which is a client of ours. So I just bought some shares because he wanted us to buy. I've never bought shares,
Sure.
right? Till recently, I never even went into PMS and mutual funds. Only recently, I kind of put money into our own PMS and our own funds.
Was it also because you were sort of respecting fiduciary duties?
Correct. It's just the attitude of not wanting to see. My thinking is always like this, right? If you had, let's say you heard that Madras Cements is a good buy, or Ambuja Cements is a good buy. Now, what stops you from not letting your client benefit from it, right? Now, where you draw the line between where you benefit from it and where your client benefits from it, whether you benefit before the client or after the client. If you do buy before the client, how do you tell the client? If you buy after the client, but will you sell before the client or after the client? There are several conflicts in the mind, though regulations allow you to do it. That's why I said we are always saying can we be a little more stringent than the regulation? So I said personally, if I don't do it, then I think no one else, I can tell other people not to do it kind of thing. Not that I do. A lot of my colleagues actively invest in the stock market. They have been and they continue to. I don't. That's one clear thing, right? That's money the right way is always been what the driver is.
For sure.
Right? The second thing which I think is distinguishing me personally and also the company in some sense is that I always am thrilled and it kind of intoxicates me to some extent that the art and the thrill of making money, right?
Sure.
That you are actually building a profit and loss statement which is positive. The profit is nice, growing. The margins are healthy, and you are able to kind of invest the capital to pay people, to do new businesses, to pay more people. All of those things are kind of exciting to me, right?
Sure.
How much I get out of it has never been a factor. It's never been a factor. I think, therefore, when you burn your own money
Sure.
and not some VC coming out of the US and their money, I think it's kind of, unless you have this attitude, I don't think you will be able to burn that money.
For sure. So now how you make enough money and you have like set of people who have joined your bandwagon and and their colleagues also joined the bandwagon. Not all of them are going to make the same, right?
Correct.
How does one digest the factor that hey, you're going to make it eventually together, but it's just the process of being together. Because I think always while growing up, I'm sure I would have realized the same as well. Hey, my decision to move from a very sort of started job in Singapore, working with the government, and then going to the US was because the guys who studied undergrad with me were probably making $150,000, right? How do you digest the fact that it's okay for now, but playing the long game, and how does one play the long game?
I think again is a lot of intricate factors which go into this, how to make it work.
Sure.
But we had a few mantras, right? I think one, we said that we will never be able to pay the best in the market.
Sure.
Right? Because one, the best is all over the place, right? And someone suddenly comes in tomorrow and kind of gives his. I still remember in our very early days when we were offering fresh graduates from IIM Calcutta or Ahmedabad. We were, I think, Peregrine was offering 3.5 or 3.6 lakhs per year in '94
Sure.
as the starting salary for a fresh MBA graduate. The biggest crib, some 25 of them have been taken in the system, and therefore I was 2-3 years senior to them, so I kind of I was given the responsibility of kind of mentoring them in some sense. So biggest complaint they used to have is that there are 2 people in their class who got 8 lakhs from McKinsey.
Absolutely.
Only 2 offers, right? Entire country, 2 offers were made by McKinsey, 8 lakhs per annum was the salary.
For sure.
Peregrine probably was the next best. But the complaint is that I didn't get the 8 lakhs and I got the 3.6 lakhs. Right? That's kind of, therefore I don't think it's always, it's good to tell employees that I won't pay you the best.
Yes.
But I think what we have given are a few other things than just money, right? One, I think we said that if you perform, you get paid. And I will not hesitate to say this, that your salary may be X. There is no concept that your kind of total cost based on your performance should be 1.5x or 2x. Right? It can be 10x. Right? That's one thing which works in our industry.
Sure.
It may work in your industry from a non-linearity of options point of view, not so much from a cash point of view. So one, we said always that no, there is no limit to, you get paid any amount as long as you perform. And several of the years in the last 20 years, several people below in the hierarchy of the company have got paid more than I got paid.
Sure.
Right? So it's kind of meritocracy in terms of pay. Pay any amount of money you want. That's one part of it which kind of helps. The second part of it is that if you stay the course over a long period of time, you become a shareholder.
For sure.
And if we get to build something non-linear, you get to benefit from the upside of it. So I think in some form we have, in the first phase of our journey with the selling of the brokerage business, I think we have created around $40 millionaires, as they called, right? I suppose, which is...
and how much did you happen to sell it for, if you can?
That business alone we sold for some 350 crores of value.
So that's a lot of money being created for a lot of shareholders.
Yeah, but I think importantly, a lot of money being shared.
Being shared.
Yeah, being
Absolutely.
shared, right? You don't get 40 millionaires otherwise.
No, not
right?
at all, right?
Now my therefore, when I get these new people onto the bandwagon, that the promise is, one, we have delivered, we have created so many of them. Now, the mantra in life is, can we create, let's say, 100 or 200 of them?
For sure.
In this part of the journey.
For sure.
Right? Now, to create 100 or 200 millionaires, you need to obviously have a certain value. And I think the entire commentary is about what we can do to you as an individual in terms of wealth creation, and how it is unlimited as long as you are able to kind of deliver the value.
For sure.
And how we will not let either bureaucracy or hierarchy or any other extraneous factors come in the middle of you getting fairly compensated for the value you have created. The moment I think we have created this message in communication, it takes away 2 things, right? It takes away the suspicion people have normally in companies of leadership, and these guys take away most of the money. We kind of left with crumbs. Typical problem in business. It takes away that kind of suspicion. Second, it kind of also moves away from the individual thinking, what is my colleague getting or someone else senior to me getting, to saying what will I get. Right? The entire context is how can I deliver, how can I make. Right? Now, it worked when we were 120 people.
Sure.
I don't know if it will work when we are 500 people. Right? I don't know.
Absolutely.
Let's see. Hoping it will, but let's see. We don't know.
Absolutely.
It's a learning curve for me also.
For sure.
Yeah.
Now that we've seen your businesses grow, and you'll obviously have a lot more businesses. You've started an AI fund, and that obviously gives power to a lot more business to flourish. What do you think is like the perspective of India going ahead? Assume we all live in an India where we would want to see it touching 5 trillion, 10 trillion. Someday, all of us get benefited off it. The countries living in it. I'm sure you have seen the US, China growth, the other countries grow. What is the model of India that needs to be sort of adopted for it to reach there over a period of time? It's a long way for us, and how does every individual sort of contribute to that?
Yeah, pretty much like our business,
Sure.
The brokerage business, right?
Sure.
Time will take us to 5 and 10 trillion, right?
Sure.
That's not challenge. Anyway, I think just inflation plus nominal growth rates will take you there.
Absolutely.
Even if you grow at 4%, you will still go to 5 trillion and 10 trillion.
With time, yes.
Yeah. The question is, how do you get there faster?
Yes.
So that you can pull more people out of poverty,
Yes.
and more people into the affordable and better middle class than they are right now. That is a challenge. I think all of us are here in our own limited ways, trying to make an impact, contribute, and hope that we all collectively can push that 5 trillion become reality in the next 3 years instead of next 7 years.
For sure.
Maybe somewhere in the next 3 to 7 years, it will happen. So I think that's kind of where most of our work and thinking is. And the principal reason why I think your idea appealed to me is there are two problems that I think are there in India, right? First is the entire parallel economy issue, right, which is driven by corruption and lack of willingness or unwillingness to pay taxes.
Sure.
And it creates a parallel economy, it creates its own complications, and it doesn't, one, come into the data.
For sure.
Therefore, I think your real GDP may be actually much higher than actual GDP you are projecting. But that's a different problem. But I think it's kind of one problem which we have. None of us can do anything about it.
For sure.
It's for the powers that be. How much impact they can make is different. So I don't have control over it, so I don't think about it, but that's a problem in India.
For sure.
The second big problem in India is we are heavily idle financial asset owned country, right? I think 70% of India owns land in some form or the other, right? 70% of India. It's a highly, the most democratically owned asset class in this country is idle asset class. Yeah. And if you ask me, the most destructive economic value is idle land. A plot of land bought anywhere and kept idle is actually creating the most destruction to the economic value.
Which is a lot more
of
in
a
India
country.
compared to say the US or the China.
Correct,
For
right?
sure.
So it's kind of, one, it's democratically owned. Two, it's significant therefore in terms of size, because just number of people and just number of people owning land itself takes you to the huge value. So that is one asset class. Similarly, there is gold, traditional gold. Similarly, there are several other asset classes like insurance, or some bond which someone bought, some fixed deposit, whatever, those kind of things, right? Or even the bank savings to some extent. So this is a more controllable problem, right? With the evolution of technology, with the evolution of very, very robust digital infrastructure, with the evolution of UPI, the ONDC, all of those macro Jan-Dhan accounts, everything, all of them contribute to kind of our ability to go and create a way of monetizing these assets or making these assets work, right? If you actually take into account the amount of idle assets we have as a nation, from gold and land itself, and even if you can impact a small percentage of it, I think you'll add 100 basis points to 200 basis points every year to GDP. For sure. Which means you're reducing the time to 10 trillion by at least 5 years or more, if you do that. So that's kind of, I think, where we should all focus on, and I think your idea made sense to me very intuitively. I still don't understand what your APIs mean. I have not so far understood what an API means. From maybe one of these days you should tell me what an API is. But intuitively it makes sense to me that is there a way of using technology to wake up these idle assets? For sure. Maybe it will be small to start with, it will be a trickle, but if it actually opens the floodgates, for sure, it can be very large. It can be very, very large, right? It will meaningfully change this business, this economy.
For sure. So, we have obviously, sort of identified those assets, built a system where there's something called asset gateway. On top of that, we obviously built credit and much of it with respect to AI and a lot to do with build. In your opinion, what does one do with these assets that creates this value that you're just talking about, barring the credit and just seeing the network that exists, right? There should be a more opportunity that is out there for companies and ourselves to build that hey, with these idle assets, you can create some value of it. Is that something that you have in mind?
In terms of the at least the way the country is going is, I suppose both the people in the house working is becoming more and more reality. Sure. Though there is still a government concern about not enough women workforce being added. I think it will not get added into the traditional business sense of manufacturing and all these things. I think a lot of our women workforce are a lot more enterprising than they come out and are obvious to the market as a whole.
They're better with money as well.
They're better with money, right? So I think if you look at the combination of a large amount of workforce in India, potentially capable workforce not working, and a large amount of idle assets sitting with them,
for sure,
and they having access to, and kind of overlay it with an ability to use their capacity or capability to generate certain returns on those assets.
For sure.
And then look at the multiplier effect of the income it generates to a family and that income going into 5x into the society and the GDP that kind of creates thereof. I think is where the opportunity is. Right?
Absolutely.
What you can do with that asset, I think, is for starters, every housewife can use an ability to mortgage an idle plot of land or an idle gold of some form, get the money and use it to either do a small business, right, if you want to be productive. And several small businesses are being encouraged today, from baking to some painting to selling paint, selling some artifacts. Or it could be just investing in the market.
For sure.
Right? You can become a day trader, though I'm not per se a big fan of day trading. I think it also adds to the liquidity of the market. It also adds to the vibrancy of the market. It also adds to the wealth creation in the market.
For sure.
Right? Could be an investor, could be a lender. Right? It could take multiple forms.
For sure.
Of nature, but I think what the whole point is something which is generating 0% return
Value, yes.
to the economy. Maybe it's growing in value, therefore it's generating for the investor. But 0% to the economy, can we just make it become 5, 6, 7, 8% ROI for the economy?
For sure. But having said that, credit in general has been looked very differently by the society for sort of decades, right? It's now that, and of course, a lot to do with not being able to repay that credit, predatory lenders existing in the market, pawnbrokers. My family themselves have been pawnbrokers, so essentially, we've been one of them as well. Sorry to my granddad, but essentially, we've seen all this while. How does one realize that, hey, credit is still good for the economy rather than being bad? And how does one sort of convey that message to a lot of women? Because there is an interesting stat, 93% of women in China do work, about 75 odd women in the US do work. When I was living there, I almost could see all of them work.
Yeah.
But in India, it's still about, in the formal employment, only 19% work.
Correct.
A lot of them informal, when you add, it's somewhere about 43
Correct.
sorts, right?
Correct.
How does one learn that, hey, even you can probably do that?
I don't think credit is a bad word in the Indian context. I
sure.
think it's like this, right? I don't know if you've seen, but almost every household, if you go to second and third tier India, not the first tier India, has this concept called chit fund.
Yes.
Private chit funds, not the organized chit funds. Right? They'll have a group of 10 people who will contribute each to the chit fund, and they'll have some auction going on, and there'll be each month someone is eligible for it, and the cost of whatever is there is kind of borne by everyone. There is a component of cost,
Yes.
which is also a lending in some form, right?
Yes.
Group is lending to one individual on convenience basis, and
Yes.
the individual is contributing to pay it back. I think that is savings come lending credit instrument is a very prevalent thing. What is the bad news of credit is essentially the pawnbroking
Yes.
equivalent, the lending of that nature.
Yes.
And I still have a problem even today.
Yes.
That I'll just a simple example, right? I think which is what we need to kind of break using technology. Let's say there is this all these NBFCs. You guys obviously deal with them. There's an MSME NBFC. There is a housing NBFC. Let's take in this city. There is 5-star business credits, a very large MSME, probably the largest MSME NBFC. There is Aptus Housing, a very large housing finance NBFC, again for the same segment of the market, right? The affordable housing segment. And let's take there is a microfinance company like Grameen Kutal, the largest microfinance company in this country. All the three of them lend at various rates of interest. The first and third lend at 24% thereabout. Their cost of money is no different from Aptus,
Yes.
but they still lend at 24%. Aptus lends at 9% or 10% or 11% depending on which segment of the market is. Now, why is this 24 and why is this 10, 11? Right? It could only be because of security.
Yes.
Now, if you kind of go through the microfinance business,
Sure.
unsecured, 24%.
Sure.
Take a 5-star MSME credit business, it is fully secured by the house, 24%. Right? Now, these are all helpful in some form, but actually the biggest impact we make as in the country is MSME.
Sure.
Right? The largest number of employment generation businesses are MSME businesses. Your 43% of women workforce can become 75 only if MSME flourishes. The biggest challenge for them is to get credit at a good cost.
For sure.
Now we are in some form creating a problem of the sector that needs the most to make a positive impact to the economy gets the highest cost of borrowing still.
For sure.